Welcome back to Business Daily here on Trust TV. Now, before the break, I told you we're looking at one of the top stories we had this morning, the capital inflow. Capital import inflows hit $5.6 billion. Let's get into it. Now, Nigeria recorded a 67% surge in capital importation during the first quarter of 2025, with total inflows reaching $5.642 billion, up from $3.376 billion in quarter one 2024. Now, this represents a growth of 10.9% over quarter four 2024, highlighting renewed investor confidence amid ongoing reforms. Now, you're asking, what is capital importation? That is the inflow of funds from abroad to fuel investment, trade, and manufacturing within a country. Now, portfolio investments dominated the inflows, accounting for 92.25%. or $5.204 billion of the total, while foreign direct investment (FDI) remained low at just $126.3 million at 2.24%. By sector, the banking sector attracted the most capital with $3.127 billion at 54.4%. They seem to keep doing that. They keep attracting most of the capital, actually. Now, followed by financing at $2.097 billion and manufacturing at just $129.9 million. Now, geographically, the FCT. First of all, there were only about 5 states that actually attracted investment in quarter one of 2025. And the rest of them, 32 states, the FCT is now counted as one state in this conversation. So the 32 states didn't attract any FDI anyway. Now, out of that, the 5 of them, the capital territory, Abuja, overtook Lagos for the first time by receiving $3.047 billion. That is 54.1, over half of the, number of income, compared to Lagos at $2.564 billion, that is for 45.4%. Now, other states that received FDI was Ogun, Oyo, and Kaduna at a minimal investment of less than about $8 million each. Now, origin of funds was highly concentrated, with the UK supplying the most of it at $3.682 billion, followed by South Africa at $501 million, and Mauritius at $395 million. For the banking sector, the Standard Chartered Nigeria led in destination banking institutions, processing $2.103 billion, followed by Stanbic IBTC and Citibank Nigeria. Now, what are the key insights for this? Is the quarter one inflows are signaling recovery momentum, particularly in capital markets and all that. But let's get to the conversation. Joining me virtually here in Abuja is Faiz Muhammad, economic and public affairs analyst. Good morning, Faiz Muhammad. Thank you for joining us on the program this morning.
Good morning, Chiamaka. Thank you for having me.
Now, you've heard me reel out all these numbers and all that. What does this actually mean? Is this, is this a good thing for? I'm sure yes, we say things are coming in better. It's a good thing, but could you explain it better for us? What does it actually mean for the economy of Nigeria?
Well, it really depends on how you decide to look at it. It's a matter of perspective at this point. Capital inflows, like you said, hit up to $5.64 billion, but the bulk of that comes from portfolio investments. That is, foreign investors looking to invest in stocks, bonds, possible futures, all chasing high interest rates. They're not necessarily long-term commitments. The FDI, which is a truer gauge of lasting confidence, was just $250 million. Like you said, barely 2.2% of the total, and actually down from what it was last year. I think this suggests that investors are drawn to quick financial returns rather than, building factories or infrastructure. And true confidence shows in projects that remain through any policy shifts or global shocks. So I think the risk is that these flows can reverse overnight, actually.
All right, now, so how sustainable is this heavy reliance on this investors on portfolio inflows in this volatile global economy that we're in?
Well, it's highly unreliable. Portfolio inflows are often responses to short-term triggers, interest rate hikes, or temporary market optimism. So Nigeria saw this volatility in the first quarter of the year. You had portfolio investments swing from 5.6 billion, inflow the previous quarter to a 5 billion outflow. So this capital rarely funds job creation or industrial upgrades. It just circulates in financial markets and can exit rapidly during currency instability or even political uncertainty.
Okay, now recently we saw the MPR rates, they were maintained and all that. Now, the monetary policy rate and fiscal policies, how well are they robust enough to sustain long-term investment in Nigeria?
I think that this surge could easily falter under global shocks like rising U.S. interest rates or an oil price swing. Much of the inflow depends on high domestic returns rather than resilience in our core economic sectors. So without reforms to really stabilize the currency and ensure that what monetary policy we are currently running is continuous, foreign capital will gravitate towards safe haven markets. I think a stronger, more diversified export base will buffer against any global risk. But the present structure, which is heavily weighted toward portfolio flows, that leaves Nigeria vulnerable. Sustaining momentum in that area will require shifting towards longer-term productive investments that are less prone to sudden reversals.
Now, we see the banking sector again is dominating and all that. What actually is driving the dominance of the banking and financial sectors in absorbing capital inflows?
Well, you see, the banking sector offers quick, high-yield opportunities, which are relatively low risk. So foreign investors can park their funds in Nigerian banks, benefit from the high interest rates, and quickly exit if the conditions change. So banks are also better integrated with global finance systems. So they provide channels for these portfolio flows and other investments. They have regulatory familiarity, and the sector's scale makes it an easy target for any foreign capital.
All right, so the manufacturing sector, although it's one of the sectors that was able to bring in some sort of capital import inflow to the country, was just at $129.9 million. That's about 2.3% of that whole money, 5.6 billion. How can we get our manufacturing and industrial sectors to pull in more capital inflows?
Well, you see, for that to happen, we would have to address a lot of the structural hurdles that bedevil the economy. Things like unreliable power, unpredictable FX access, a poor transport infrastructure or value chain supply lines. All of these discourage long-term industrial commitments. So you have to have targeted incentives like tax holidays for exporters, or maybe financing guarantees. That would make the sector more competitive. Clusters near ports, resource hubs, anything that would reduce logistical costs while streamlining regulation. I think it's also important to have a very consistent trade policy. Nigeria has had a habit over the past several years of making contradictory statements with regard to its trade and investments. So investors need to be sure that their investments won't be undermined overnight. Without these reforms, manufacturing will still struggle to match the banking sector's magnetism when it comes to capital.
Now, banking, finance, they've been getting this money, but how could they, somehow monetize this inflow into credit growth and productive development? That's for our local banks here in Nigeria.
Much of these inflows are channeled into government securities, or they just remain in the financial system. So lending to SMEs and infrastructure has remained very limited, partly due to the risk aversion a lot of investors have, and of course, high collateral demands from the banks themselves. So as a result, the economy sees less job creation and industrial expansion um, is less than it could potentially be. I think what needs to happen is that the credit frameworks that the banks currently operate needs to be strengthened, and if if, for example, they could introduce targeted lending quotas for productive sectors and align, the government would have to align monetary policy with its development goals. That would ensure foreign capital fuels growth rather than these short-term financial returns. It's really about aligning trade policy
Okay.
with developmental access. If a foreign investor starts to feel as though the government's goals are being matched by its actions, then they have more confidence in investing in sectors that would traditionally be considered more risky.
Okay, so basically, when the government says, well, we're going to do something about the power sector, they see action being taken towards the power sector working, maybe more generation,
And
somehow, something being happened, because action,
ex-
will precede that. Now, we've come to one of the
exactly.
shockers in this story where Abuja, the Federal Capital Territory, has toppled the commercial capital of Nigeria as the, destination hub for this capital inflows in quarter one of 2025. What do you make of that?
I think this likely stems from major government-backed contracts,
Okay.
particularly in infrastructure and energy, which are concentrated in the FCT. So I think the proximity to federal ministries and regulators eases bureaucratic processes for investors, and policy incentives and high value contracts tied to government operations all tend to be centered in Abuja. I think while Lagos still remains Nigeria's commercial powerhouse, the combination of political influence, large scale public spending, and reduced operational pressures may have tilted investor preference toward Abuja for this quarter. It remains to be seen if that is going to be a continual trend.
Okay.
It is possible if the government continues its infrastructural goals, that Abuja will continue to see these sort of inflows, but it remains to be seen whether it's something that will become a consistent facet throughout the year.
Okay, so now, peradventure, hypothetically, if in quarter two
Mm.
Abuja remains and maybe up until the end of the year, what's the impact on our commercial capital, Lagos?
Oh, I don't think there's too much of an impact. Truthfully, there are issues with business registration and tax policies that Lagos needs to work out.
Okay.
And if it could expand its port capacity and ease intercity transport, that would reduce a lot of operational costs. It has a very strong private sector base, and that remains a major asset for the country. So I don't think that this was going to have a long-term effect on the economic outlook for the state or the city. It's simply an indication that Nigeria is diverse enough that there are other options for investment other than just Lagos.
Okay, I have two more questions for you. Still on the states and the regional
Mm.
impact, just 5 states. We have about 36 states was the Federal Capital Territory, and for this conversation, Abuja is counted as a state. Just five. The
Mm.
remaining 32 states didn't
Mm.
attract any investments, any capital inflow of any sort. What does that speak, for them as a state and then for our economy generally as a country?
I think it simply says that investors are focusing on those areas that show a certain level of promise.
Okay.
It really has to do with infrastructure.
Okay.
It has to do with governments and local businesses that create compelling investment packages, and do the best that they can to reduce whatever bureaucratic friction would exist for a foreign investor. Some of them have special economic incentives or sector specific incentives that target specific industries. So I think the rest of the country has to look at these steps very carefully, because without them, capital will continue to be concentrated in Abuja and Lagos. I think replication is possible across the country, but it demands a blend of um, investor facilitation, active promotion, infrastructure readiness, deliberate positioning on the parts of state governments and local businesses to really compete effectively for foreign inflows.
All right, I was going to ask another question, but time is not our friend. We need to leave the studio soon. Thank you so much for your insights on the conversation, talking to us about quarter one capital inflows into Nigeria going up by 7%, and how Abuja has somehow toppled our commercial capital, Lagos, to become the destination hub for those capital inflows for this quarter one 2025. Thank you, Faiz Muhammad, economic and public affairs analyst, for your insights this morning on the program.
Thank you very much.
And that's much we have for you this morning on Business Daily. For more of our news programs and documentaries, do follow us on our social media platforms and on our YouTube live stream. I've been your host this morning, Chiamaka Nwafor. Same time, same place tomorrow. Bye for now.